Hello, I'm David Chaston with 90 at 9, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds on 9 o'clock with news that TPP is gaining new momentum. Singapore has become the latest to ratify. New Zealand has said it will do so by the end of the year. And now there is news that plans are afoot to expand the group from 11 to include Thailand and Colombia. The TPP is an impressive trade agreement, if only for the reason that it contains strict labour and environmental obligations, usually absent from other such free trade pacts. Fear of missing out is sucking in these new and other signatories. In the US, the number of people filing for jobless benefits dropped to almost a 50-year low last week as the labour market continues to expand, even as trade tensions are casting a shadow over the economy's outlook. That low benchmark, however, was on a seasonally adjusted basis. On an actual basis, the number has been rising since the low point in May. A presidential criticism of the US Fed's indication that a gradual raising of policy rates is their plan has seen both benchmark bond yields fall and the US dollar go soft. Political interference in the monetary policy of the US is very rare, and it is now uncertain how the Fed and its newly appointed chairman will react to the pressure. The comments also turned Wall Street negative. In Canada, an early indication of their jobs market in June shows worrying data. The huge payroll processor ADP is reporting that more than 10,000 jobs were lost in the month, a sharp reversal from the 26,000 gained in May. In June 2017, this survey reported a 48,000 gain. And staying in Canada, their federal housing agency has announced new rules to help the self-employed qualify for a mortgage. In China, the central bank set its yuan-US dollar currency rate at 6.7 to the greenback in an acceleration of its depreciation and an 11-month low. Offshore markets have marked it down even further, currently at 6.8. And the Chinese central bank is loosening rules, trying to encourage banks to invest in more subprime debt, especially that of local authorities. Banks, however, expressed criticism about the risks from this policy push. The whole move smells of official urgency to ameliorate a coming slowdown. And the US Treasury 10-year yield is falling again, now at 2.85%, down 3 basis points today. The Chinese 10-year is at 3.50%, that's unchanged, while the New Zealand equivalent is now at 2.87%, that's also down 3 basis points. Gold is lower yet again, and just at $1,224 an ounce in New York. In London, it closed at $1,218 an ounce. Both of these are $6 falls, taking yellow metals price back to levels we saw almost 18 months ago. The World Gold Council is calling this an attractive entry level. We should also note that the price of copper has hit a one-year low overnight. Its descent has been steep recently. It is down more than 13% in the past 5 weeks alone. Copper, often called Dr. Copper, is an important leading indicator of emerging market growth trends, so the fall is ominous. US oil prices are a little higher and now just over $69 a barrel. The Brent benchmark, however, is a little softer, just over $72 a barrel. And the Kiwi dollar is starting today softer as well, but more in line with where it's been over the past week, at 67.6 US cents. On the cross rates, we're holding at 91.7 Aussie cents and 58 Euro cents. That puts the TWI at 71.2. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.